So it's either pre-market, I would say like anytime after 5:30, and then anytime about 15 to 20 minutes after market opens. And the reason why it's more useful during these times is because the structure of gamma and delta and the Greeks themselves change overnight. And then another reason why is because you have I found use in the ICT kill zones, and we'll get into that here in a second. But I want y'all guys to understand that a lot of different, there's a lot of different theories out there on how this works. So like, oh, the market maker's there to manipulate you and stuff like that. That's all fine and dandy. You can believe what you want. But what I found out is that, I believe that market makers are just there to offer liquidity, right? So there are manipulation legs, there are stuff like that. But whether the market makers were there to manipulate you, that's up into interpretation. But how ICT, and from what I've watched their videos, is there are manipulation legs where you would see that as a manipulation leg, like you would fall for it. So you have to identify that whenever you see it. And because just using this gamma edge chart alone, you can't just look at the web app and be like, oh, it's a bullish structure. It's everything's going to go up. Like you can't just make an entry and think like, okay, right at market open, it's going to go up. Like I've done that before. I thought that was good, but whenever I actually started, combining these concepts with Gamma Edge, I was going to call this ICT with Gamma Edge, but I said I'd call it PD Raise Gamma Edge. I'm not an ICT master. That's what we have Rustik here for. But so I just use the Gamma Edge itself to find moneyness where market speculators are. And then I try to identify significant liquidity levels. And I identify these significant liquidity levels, and you'll see me do this in the pre-market prep inside the channel, in the analysis channel that I have. And I do this because I'm trying to identify what's more significant and where we might see a rejection off of. And how to identify that rejection? All I'm doing is I'm looking at the level itself that I mark out on my chart from the gamma edge, and then I wait, and then I see if a PD array is formed. Okay. So, like step by step, review web app to look at net OI above and below spot price. Review delta and gamma above and below to identify the strength of the environment and what is significant. I also like to pair this up with full time frame continuity. That's just like pairing up, like for example, are we trending upwards on the hourly, daily, weekly, quarterly? Are all those time frames pointing up, right? And if we do have full time frame continuity, that's good. But we don't want it to be mixed matched. We don't want it to like be, bearish on the daily, but up on the weekly and quarterly and stuff like that. And I'll get into that here in a second. Number 3 is mark out these levels in your chart once you find them on the web app, and then make my entries using PD arrays. And I know that ICT itself has a lot of different PD arrays. The PD arrays that I like to use, I like to keep it simple, just fair value gap and order blocks. If you have any questions on more PD arrays themselves, that's what we got Rustik here for. And then these are just key terms that I'm going to go over when I open up the web app. It's going to be a ledge, COI, so that's just call open interest. It's the most significant call strike. How does these levels affect us when out of the money and in the money? Identifying transition zones, drunken sailor, and then you'll see me talk about ball going up a hill and what affects transition through these levels. And that's just going to be volume. So I'm going to go ahead and share screen, change windows. Let me see if I can. All right, can y'all guys still see my screen? You guys see the web app?
Yeah, we can see it.
Okay. So I just preloaded this up for you guys. I'm going to do one in the web app itself, and then I'm going to go into some of the pre-market analysis that I've already done, and I'll explain to you why I've marked out these levels. and that way it's already laid out in front of you. But I'm just going to go by the step by step. So when I first open it up, I look at all expirations. The reason why I'm doing this is where I can see what the most significant are. So obviously, if I scroll down here and I see 221, 19%, 321, 19%, these are the most significant jacks by expiration. These might be more important whenever we get to these days where we might see like a big move of some sort, or because let's just look at themselves. So 221, all we can see here is that we're in a gamma condition called environment. So if I see that what I like to look at is where we're at. So I see we're at 6115. Okay, if we decide to move down, I want to mark out a range. So I see the bottom of this range is going to be 6,100. I know a lot of people are going to be looking at the delta itself. That's fine, but I also like to look at the net OI. So the net OI is 13. The reason why this is significant because we got 2,000 right there and 822. I really don't see us getting below this level if we come to this date. So obviously this is, pretty far out there. And this will change significantly as we get closer to this date. And then I'll go from like a top-down analysis. So from going from all the expirations to just a single one, I see that we have a drunken sailor range right here. This is just the white box. We're in the drunken. We're not even in the. We're outside that drunken sailor range, and I would say that obviously we have 457, 331. So I would say that the bottom of this range should be 6,100. And then I like to look at expected move. Now this expected move could be up or down 43 points. So 115, that could bring us all the way up to 150. I don't see us go any higher than 150. If we do push up this level, I see us going to snap back down, and I see this level holding. I'll combine the future couple of dates to just create, I want to see more substance on each of these levels because, for example, that 6120, that might be significant. I don't know. Okay, there we go. See how now this changed a lot. And the reason why this changed is because, okay, we have 6115. There's a gradual, it's 1,000, 1,000, 1,000, 1,000, 1,000, 2,000. And then 2,000, and then 4,000. So right at this point, it's going to become like a ball going up a hill. And you can kind of see the structure like this. So you get higher, 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 and then really high. So I understand that, some people might not see it like this, but you'll see that as we get further up and higher, we'll have a hard time moving up further. And the reason why I always pay attention to SPX and SPY is because XPX is the most liquidated asset in terms of options trading, and SPY is the second. All right, so you can use Gamma Edge for all sorts of tickers. I like to use it for SPX and SPY because all these levels are really respected. No matter what ticker you use, I just like doing it like this because I've seen how Gamma Edge themselves have used it, and they always do their pre-market analysis with SPX itself. So I'm going to go to SPY.
Hey, hold on a second. Stay on this. We got a question from Sirius Rose about why you don't see price falling below that level you were talking about. So could you explain a little bit more why you think that level would hold?
Yeah. So, all right. So I keyed up these two key strikes, and I see 1,000, 1,000, and then you go from 875 to 2,000, 2,000. Now, what I'm saying right now, don't write it on a ledger or anything like that, because like I said before, this is going to be more significant in the pre-market at 5:30. So this whole entire structure is going to change. All right, and then once like 15 to 20 minutes after the market, I like to run it again, and I like to pay attention to this net OI. And I also want I'm going to break it down for you in terms of delta and gamma. So delta itself is more significant at the money. So gamma is just the sensitivity to delta. So I don't know if you guys understand that calls themselves have a positive delta, and then puts have a negative delta. All right. So all these contracts out of the money, these are calls above our overhead that are, they're all above us. And these calls are out of the money, and the longer we stay here, they will decay. That's just how contracts work, especially when you're doing 0 day or 2 day or 1 day. Like, these will gradually decay over time. But what's going to push us up is volume. All right. And what happens whenever you remove these positive deltas in the overhead? Well, the delta shrinks. And then we see that delta itself, we go from 67,000, 48,000 to 134,000, 183,000. We might go below 6,100, but I'm saying that it's an important area of liquidity. That's what you need to note from this. It's a significant area of liquidity, especially when you have stacked levels like this. So this is an easy transition for us to go through. 1,000, 1,000, 1,000. It's like, it's all within the same, it's all within the thousands, or under 2,000. So you get to here, and then it increases significantly. You go from 875,000 to 2,000. Unless we get an aggressive sell-off or a catalyst, or some sort of news or anything of that sort, then we could push through those levels. Now, what would happen if we got below this? Well, that would become out of the money. If it's out of the money, it's that delta itself is going to slowly start to shrink. And I'm going to go back to the PowerPoint itself because just go over something real quick. So change windows. All right, so out of the money calls decay, out of the money puts decay. So out of the money puts would be anything below spot price. Delta represents the unexpected price change in an option for every $1 movement and the underlying stock price. Call options delta ranges from 0 to 1. So I want you to know that whenever a call option is in the money below us, it's at its whole intrinsic value. While a put option ranging from -1 to 0, a delta of 0.50 means the option price changes 50 cents for every $1 move and the stock price. So gamma in a call dominated environment or predominant environment, we will add deltas at an accelerated rate. Gamma is maximum at spot price. And why gamma is significant, if I'm going back to the chart itself, all right, can you guys still see the screen? The web app itself?
Yeah, we got it.
All right, so as we move up, what's significant about this is it wouldn't take very much buying pressure to push us up even higher. The reason why I say this is because delta will be changed significantly based off of these gamma levels. So you could see 6,120, 625, all these levels, delta will be increased at an accelerated rate, and delta is at its most value at the money. And for example, 675. If we do, so this is how I would mark it out. I would say 6,100 is the bottom, and then 6,075 is the absolute bottom. The reason why I say 6,075 is if we break below 6,100, I will target 6,075. Whenever I'm using the web app, I like to try to create an if-then bias. So like, if this happens, I'll do this. If this happens, I'll do this. And I'm not just gonna, wait for price to shoot through these levels and think to myself, okay, it's gonna go to 675. No, that's where we have PD arrays come into play. And we're gonna look at the chart itself. We're gonna use the PD arrays to create further confluence of targeting these levels. So what I would like to do is at 6,100 is, see some sort of reversal. See if we get a change in standard deviation, see if we get an order block formed, see if we get an order block with a fair value gap. If these things happen in the New York session, that creates some bigger confluences. I value things that happen inside of these kill zones even more than than it not being inside of a kill zone. That's why I have these kill zones marked out on my chart, and we're going to go over it here in a second. And you'll see that these levels have been respected before that I'm talking about. They have been respected. So now I'm just going to go over to Discord itself, and I'm going to show you the history, right? Just show you guys some sort of proof. I've back tested some of these levels, and we have. Here, let's go to the PowerPoint again. Share screen. All right, so all things equal, what do we know about charm? Once price is above transition, that means we're basically enveloped by positive net OI and below spot price, which means we could be pressing up based solely on charm. Whether the left-hand plane is dominated by in-the-money calls or out-of-the-money puts, depending on specifics, we can probably see that through an increase in the charm left-hand plane. So the left-hand plane on the net stat is going to be everything below spot price, and everything on the right-hand plane is above spot price. That's just how it's marked out, and that's the structure of that graph. So we can probably see that through an increase in charm left-hand plane, that net stat calls that were previously out of the money are now in the money. So that's just showing that if price moves upwards, now those calls are not exposed to charm itself. And puts that were in the money now are out of the money. So if those puts were in the money and now they're out of the money, that's going to slowly start to decay and decrease the negative values on our books, meaning our book would get longer for those switch deltas over time, and the dealer books would get shorter. So that's what Rustik always talks about, is where the dealer will have to buy the hedge flat. So this is an example. We have net, what I'm looking at here is contributions of each strike. So I see in the left-hand plane, 605, we have a significant amount of in-the-money calls that are not exposed to charm. But we have 605 on the charm level with out-of-the-money puts. Well, obviously, if price is at 609, this is the price itself. We're trying to figure out where price is at, what's below us, what's above us. 605 has a significant of out-of-the-money puts. And they are and those puts are decayed so much that there's a significant amount of positive delta below us, right? So we know we have positive deltas below us. Those puts have no value of any sort because they're so far out of the money, they've decayed. The only thing that's significant below us is the positive delta. And then we have 615 that's so far out of the money that is actually more significant with negative deltas above us, right? So now that we went over charm, and that's just what I'm looking at. I'm looking at like, okay, 605 puts. There are a lot of puts there, but they've decayed so much that the positive deltas are now significant. The out of the money puts, the out of the money calls, nothing crazy. Negative 46,000 in delta. I just look at these as values themselves. And we can also see that the out of the money puts don't have a lot of gamma. So gamma, like we talked about, is going to affect the delta itself once we move through those levels. So if we move through 606, delta would increase. Negative deltas would increase at a significant rate, but not compared to 615. So that's not very significant compared to 615. And then Vanna, I don't really like to get into that. That doesn't play a whole lot of role in what I'm looking at. So I'm just going to go back to the Discord itself, and then I'm going to share with you change windows. All right, can y'all guys see the Discord?
Yep, we can see it. We can see it.
All right. Where is this? Oh man, Did the channel disappear?
Which channel? Which channel?
The analysis channel.
Shouldn't have. Scroll up. Scroll up. Should be in the premium zone. Premium zone. Drop down your premium zone. Premium zone. Click on it. Click on it.
Oh,
there you go.
Oh, thanks. All right. All right. So let's just look at 213 for example. So I said significant areas of liquidity for SPX, call dominated. This was populated at 735. Expected move 58 points. So, okay. So I see right here that we're in a drunken sailor range. I see that 640, that's a significant level. I really wouldn't expect us to go below that, but if we did, I would say is 625 is the next most significant level. These are just an if-then bias. So like if this happens, this happens. And then, so I would expect, okay, if we're, pushing higher, I would expect us to target 675. So you could see I said absolute bottom 640 to 645. Above 650, I will target 675. The reason why I looked at 650 is because I looked at all expirations. So if I look at 650, we go from negative 4,000 to negative 10,000. And then I would say 675 is the next significant level. 650 is I have not only built that confluence from the Gamma Edge itself or the web app itself, but also because we respected that level many times on the SPX. And then below 640, I will target 620. And significant areas for liquidity on SPY, call dominated, expected move 5 points. So current price is 602.40. Absolute bottom 595. Above 602, I will target 605. So we have 600. That's the absolute bottom. This range would be marked out from 605 to 600. Our JEX is not, it's not as so ambiguous. It's not an easy transition. But if we did get above 604, we could expect, delta to increase at an accelerated rate based off of the JEX that's in this column. And then I would see that 608 would be my absolute top. Significant area of fluidity, top 608. Significant area above this, 610. Line in sand, 605. Bottom, 602. So we have 602. This is the last area. I would assume that 601 to 600 would hold, and I would hold these together because of this is just based off the chart itself. The 602 level was not significant enough for me to actually mark out, but I incorporated this with the overall pre-market prep. So let me go ahead and go to the chart now. Oops. All right. So I like to use SMT and an ES for SPX and SPY. I understand that it's a divergence representing a situation in the market where two correlated assets being seen within the same time frame. exhibit an opposing structure. So I'll just use ES. I'll just use ES and I can identify where SPX might open at. And then 1B, a level disrespected on SPY, might not be disrespected on SPX. So I'll analyze both charts using time frame alignment. So I'll just do a top-down analysis, and then I'll just do 1 day, 1 day. And then I like to just use this indicator right down. I turned off all indicators. And I see that we have a fair value gap from 660. Are you guys tracking? Do you guys have any questions about what I'm talking about right now?
There was a question about Drunken Sailor. When you get a minute.
Yeah. What was the question?
Just what is it?
Oh, it's just an area where we see that so the whole entire point of drawing the Drunken Sailor range is to kind of identify where P-trans and N-trans is, and then that transition isn't so clear. So we could see ourselves bouncing around in that range. That's why that box is drawn around those levels. So if I see, for example, at 675 and 660, there's a box, drawn around that range. We could draw a box from 675 to 660. And then if I'm going to the 213 date, so I'm going to reference 213.25 on SPX, and then I'm going to go back to that analysis that I talked about. And then let's just do 30 minutes here. All right. All right. So you see right here, price opened up around, well, actually, sorry. Price opened up at 660, right? And then we had a fall down here to 650, and then we respected that level, and then we shot back up. So I'll use both assets to see, what's happening here. I'm gonna go back to the 3 minute right here. All right, I see price drop down to 603.16. Now, if we were to do this on replay mode, and we were to see price drop down, I would immediately think 603.28. But remember, my game plan is I would target anything above 602. And then I'm just going to go back to that web app itself to make sure you guys are following along. Change windows. So this is on 213. Call dominated, expected move 5 points. So we know that in the pre-market that we're call dominated. That means on the upward move isn't going to be as hard as coming down. And that's just because gamma is going to increase those deltas significantly as volume pushes us up. So current price is 602.40. That's from the pre-market. Absolute bottom is 595. So if we get below 600 or below 602, I will target 600. 602 is significant because we've held that level many times, and I've drawn that out of my chart. And this is just from you drawing your levels out on your chart and finding out what's been respected on previous time frames on a higher time frame alignment. Significant area of liquidity, top is 608. So 608 is what I would target. Above this area, 610. Line in the sand, 605. Bottom for me is 602. All right. So now that I've already went over those levels with you. This is all before the market, and then I'll share with you the chart itself. So what happens here is we open up, we go 603. All right, I see this is kind of like a sweep right into London session highs. These are all things that I'll start looking at. I look at I'll do a top-down analysis on a lower time frame, or sorry, higher time frame. So I'll just go from the 4 hour, 1 hour, and then 15 minutes. But as far as like time sake, you can see that we sweep this London session high, we pull back up. But to me, I'm like 603. That would kind of psych me out. That would make me think, are we going to go lower as soon as we're dropping down? I'm sure everyone's thinking that. How low are we going to go as this candle is forming on a 3-minute chart? But you'll see we closed right at 650. I've already drawn that level out. And when we get a push back up and then another push back up, and then we kind of get we have a change in standard deviation as soon as this candle closes above the the biggest red candle down. So I'll see this push up and I'll think, okay, I'll make my entry there. And yeah, does anyone have any questions?
I think just to follow up too with the question of the drunken sailor, which I think you're kind of seeing here as you talk about price pushing up into that box that you've drawn. That's that transition zone, right, on Gamma Edge, on the web app.
Mm-hmm. Yeah.
Yeah. So Krish, when you're seeing us post the Gamma Ebb web app charts, it's going to be that white range box.
So that white range box, is it updated by Gamma Edge, or does you guys have to do it yourself, looking at the open interest?
It's not always there. So sometimes you'll have to do it yourself, and I kind of explain to you how I draw up my range. I figure out what's a smooth transition in terms of net OI, and then where does it get more significant on those levels above and below the current price. And I'm just using these levels to target internal liquidity. This could be an order block for value gap formed. You'll see when we open it up in the middle of a range, and this is the range we opened up in. We opened up in the middle of a range. We don't know if we're going to push up or get a manipulation down, which that's what we got. We got a manipulation down, but even if we get a manipulation down, we're targeting something. 603.17, that's not significant. That's not an area of liquidity. SPY just follows SPX.
Right.
SPX is the most liquidated asset in the options market. So if we have already identified 650 as a key level and I see the next candle close and push back up, now I'm looking for a PD array of some sort. Do you get what I'm saying?
Not fully, but yeah, just continue. The PDRA, from where I can find the PDRA.
Mm-hmm.
How do I know what is the where the price is in premium zone and when it gets into the discount zone?
Okay. I understand what you're saying. So you can use I don't really like to use the discount and premium zone too much, but all you need to understand is those ranges that I'm drawing out on those levels are liquidity levels themselves. Whether you want to believe it or not, like I've back tested this so many times where we've reached into these levels that I mark out, and how I mark out is I'm showing you, and I'll see that we always, not always, I would say 8 out of 10 times you'll see us reject off these levels. And that's the thing, like you don't know if we are or if we aren't. That's why you're looking for PD arrays to confluence your trade. And we're just trying to look at, are these levels respected? So if I draw significant liquidity levels in my analysis channel, which I'm showing you that you can do it too, where I'm trying to ask ourselves, are these levels respected? And then we all, if like, let's say it's a call dominated environment left in the right hand plane on NetStat. So we know that we have a significant amount of deltas, positive deltas below us, and a significant amount of deltas above us. That opening range that we open up into, usually from what I've seen, is a manipulation leg downwards. Do you get what I'm saying?
Krish, also don't get hung up on the language of the ICT PD array, right? It's called premium discount array, but what that ultimately is just a fancy way of saying buy side or sell side. So is it bullish or bearish, right? So a discount array is going to be, they're going to be your like bullish fair value gaps, your bullish order blocks, right? Because they're on the discount side, they're on the sell side, right? Or below us, and so they're going to be discount when price moves up. And then your bearish fair value gaps, order blocks, breaker blocks, those are going to be your premium arrays or your liquidity that's above, because as price moves lower, they're going to be on the premium side. They're going to be above us.
Okay.
Does that make more sense?
Yeah.
Okay, we don't want to be super hung up on like, are we at is price below the 50% or above the? You'll drive yourself crazy trying to draw out premium discount zones and trying to figure out which one is the correct premium discount zone. So just paying attention to whether it's a bullish or bearish PD array.
Yeah. So if we're trying to like be more precise on this, I like to make my entries on the 3-minute to 5-minute time frame. I like to look at time frame alignment. So if I'm looking for time frame, where is it? Yeah, if I'm looking for time frame alignment on SPX, on ES using kill zones, I'll be using fibs to find fair value for the swings, and I'll do it like, let's see, what am I trying to say? I had this marked out for you guys. Oh yeah, time frame alignment, time frame for bias is going to be my 1 day to 4 hour, and then I'll do my time frame for structure 1 hour to 15 minute, and then time frame for entry 3 minute to 5 minute. For example, I'm just going to go on the 4 hour here. Okay. So if I were to go over with you some of the indicators I use, I like to use this indicator. It's called Super Order Block Fair Value Gap. I kind of have the settings to where it shows me mitigated order blocks. That's something I'm looking for to see if we've already mitigated before. I mean, you could just draw these out yourself. And then, I'll see right here. You see that this is a fair value gap. And then I'll like to see SPX on the 4 hour as well. Okay. And then if I'm drawing my consequent encroachment of the fair value gap, that draws us out right at 6,100. Oh, look at that, guys. We were talking about 6,100 earlier. Funny thing to notice, we have a fair value gap there. We have a constant encroachment there on the 4 hour on SPX. And we've noted there for next week, when we're on Tuesday open, we noticed that 6,100 is a significant level. That's what I'm trying to say is like whenever you align these PD arrays with these levels, like I looked at the gamma edge chart first. I did not know that this was here till we looked at it, but this is going to increase your confluence that is a respectable area. Does that answer anyone's questions? Like I remember someone asked me about like, well, how do we know that area will be respected? Especially at higher time frame PD arrays like fair value gaps are, I would say they're more valuable. I mean, and we just use the web app itself to identify how strong those levels actually are. And it's kind of nice to see how significant they are, because we might have a fair value gap there and there might not be anything there. And delta, we can use delta, especially whenever it's compounded like that in 2000, we can use that as an area that's more likely to be respected. And that's how I use delta to find respectable levels. And then, okay, so if we were to match this up, so what's significant about SPY, right? Well, we're on the 4-hour. We drew on fair value gap. And then we would say, okay, 608. 608's, you know, this is an area where we dropped back down into. 608 is probably a respectable level. Well, it also aligns up with the fair value gap right here. Consequent encroachment, I could see 608 would hold if we push back down. And then I would look for a PD array on a lower time frame. So we would draw back down in this range, and I would go back into the 5-minute time frame. And then I would just look for, you know, a change in standard deviation. One of the things we get is like an example, and is an order block formed. So an order block is just, you know, the next candle will be, I don't know if I'm explaining this right, Rustik. You might be able to help me out. Like the next candle is, you know, aggressively closing over the previous one, and find to sweep into an important level. And I don't want to see price close 50% into this level. So obviously you see right here, we mitigated this order block and we got lower. And that's the thing. It's like, okay, if we shot up out of this range and then we came back into it, I want to see that price respects 50% of that order block, kind of like the fair value gap that we talked about on the 4-hour time frame. That consequent encroachment is just 50% of the fair value gap. I want to see price respect that level. I want to see on a lower time frame. Let me just go back to SPX in the 4-hour real quick. So I'm going to draw this out so that way the indicator doesn't just disappear on me. Can y'all guys still hear me?
Yeah, we can hear you.
Okay.
Yeah.
All right. So I draw this out in the 4-hour time frame. This is from my top-down analysis, right? And then we're going down to the 5-minute. Okay. We know that this is a significant fair value gap. And then I don't want to see price go below this level. And so I would like to see a candle close, a 5-minute candle, 3-minute candle close, and then see if we get, you know, an order block formed here. If we get an order block formed here, and we're also still in a gamma positive environment, then I mean that has enough to tell you that I'm expecting to move to the upside, right? Like, do y'all guys get what I'm telling you? This is just one of the examples.
Yeah, and likely on that 4-hour chart, I mean, you see a lower high, right? On SPX, you see the lower high. You see the lunch macro come down and test the fair value gap, right? And then because it's a lower high, we could expect one more push down, which it sounds like you're expecting, you know, sometime Tuesday, either pre-market or market, where we'll draw on that 4-hour fair value gap liquidity, because there should be a lot of liquidity in there. But then using gamma edge, you're looking for 6,100 to hold because it's positive delta, positive gamma with net OI like you want to see it. So you're expecting 6,100 to hold and then shoot up from there, right?
Exactly.
Right.
Right. And I'm not just I'm just seeing how we react to these levels. And going back to SPY over here, well, we'll see. We're still on the 13th. Okay. So on the 13th in the New York session, we went to 607.48. All right. So I want you to remember that price, 607.48. And then I'm going to go back to the Discord itself. Share screen. So we got 607.48. What did I say the top was? Significant area of liquidity, top 608. Another thing to note about this, guys, is I often see that we fall about 50 to 60 cents short of the significant area of liquidities before we get a reversal. All right. So I don't want y'all guys to think like, and this is like I said again, this has been back tested about, I would say about, I know it's not a lot, 20 to 30 days is how I've been doing this over and over again. And oftentimes, and not every time, we will fall short by 50 to 60 cents before we hit that significant area of liquidity. So I'm pretty sure I made a trade off of this. You know, we got to 607, we got above 607, below 608, and then I figured we could reverse from there based off of how significant that liquidity level is. And then if I'm going to the web app, let's go to the web app for SPY real quick. 608, right? Significant. 607, we get a push to 9,000. 17,000. That's such a big difference. That's not a smooth transition at all, that we would struggle to move higher. And then the next one, the next level would be 610, 31,000. There's no way we move above that within that day. That's a what, we had a 5-point move. We're at 604 to 610. That 610 is just not on the table unless a catalyst is formed, a news event, or some sort of good news had to be coming. So if I'm sharing with my screen, so I'm going back to the chart. I see that in the New York session, we got a bounce right there from 607 to 605. And I believe in the 50% theory. So I'll usually, let's say, draw my box from right here to right here. So this is something that y'all guys can do. This isn't like an absolute thing. But I do believe in the 50% theory, where we draw our swing low to swing high. I'll try to draw what's 50% of that. Okay, 50% of the swing low to swing high is 605.30. That's what I'll target. If I see that 608 was significant, we're already getting a reversal. We already got a change in standard deviation. We got an aggressive candle close before this candle up. And y'all guys can follow T Trades on YouTube. He goes over some of these PD arrays, and it's an order block right here as well. This just marks it out in the indicator. If y'all guys want to use the indicator, that's cool too. So we see an order block was formed here. We had an aggressive candle close down below, and we want to make our entry. I don't really care as long as I see that and I see that the order block has already been mitigated and now we pushed through lower. I'll make a put contract and then I'll target 50% of this, which is this line down here, and 605.35, and get out there just for a little scalp play. And then we can expect 605 to be a significant area of liquidity. Well, if we were to match up 605, because we're going back to the 13th. So we got, push down to 670. All right. We're going to go back to the Discord itself again. Share screen, change windows. Above 650, I will target 675. So significant area of liquidity, top 675. So, and then I can go back to share the screen. And then we get a push down below 670, 675, and then we get an aggressive push right back above it. Y'all guys following along? You guys have any questions?
And also it dips into that transition zone again.
Yeah.
Right. Just to kind of give it a test and see if that, if that zone holds. Now, if you drop down below that into negative trans, right, then you would expect the price to fall down to like the pre-market, the New York pre-market lows. or something like that. Or you'd be looking at additional like gamma edge app levels at that point once you drop through that transition zone, right?
Exactly. And then to go over another thing with you guys is one of the things I like to do in the pre-market is, I guess, I like to try to figure out where we're going to open at. And you'll see you'll see me typing out expected open. Well, how do I figure that out is I go to futures and then I try to correlate. So let's see, where are my kill zones not on? I'm on the 1 hour time frame. 5 minutes. All right. So I could see that on Friday, the high of the day was at 61.45. What's the equivalent for so if our New York AM session on Friday was 61.45, what's the reflection on that for SPX? Well, it's 61.27. All right. So on Tuesday, for example, if we open up, am I still sharing the chart with you guys?
Yeah, you are.
Okay. So if we're looking at the chart and we see that this is 61.45, and then we gap up, we don't really gap up, but as this is a 23-hour market and we're pushing up even higher, and let's say we go up to 61.50, and that's where we're at during market open, then I would expect SPX to gap up. Well, what happens if we gap up, right? But what's in that area is what we would ask ourselves. Well, I'll go to the web app itself and figure out, did we gap up above any significant liquidity levels? I would like to see us sweep those significant liquidity levels that I marked out, and I showed you guys how I find them. And then I would expect to keep pushing higher because we're in a gamma, we're in a gamma environment, positive gamma environment, if that's the environment that we're in. Now, if we're at a different environment, I'm going to show you guys, let's see, I'm going to change windows. I'm just going to go to SPY, and then I'm going to go up I'm going to go way up because we've been in a call dominant environment, I would say, for the past week. So I'm trying to show you guys a different environment and how I would read that. So that way, whenever we do get some, some price in the overhead, you're not all like, what the heck is this? All right, for this, for example, we see that we have a lot of puts in the overhead. All these puts are in the money. We see a significant price at 590. So I would expect us to hit 590 and then get pushed back down. And then I would see, well, where would we go? And I really don't see us going above 590 with all these puts weighing in our overhead. And keep in mind, if puts are in the money, they increase in delta the longer they sit there. Is where they're probably at their whole intrinsic value unless puts start selling off. How do we know when puts start selling off? Well, that's whenever I use the vol-m command, vol-m to vol-d command. So, game edge. Oh, sorry, forgot to put the vol-m spy, and then vol-d spy. I'm not going to use this as reference for that key date, but I am going to say that whenever we get to that level, so I would look at this and I would think, okay, if this line is rising, this put centroid, if this is rising and price is falling, then we can kind of indicate from there that puts are selling. So we have puts being removed off the table. And that's kind of what we have right here, but we're just trading sideways because we have calls also selling. There, guys, tracking. Hello?
Yeah, you're on.
Yeah, you're on.
I'm tracking.
I'm tracking.
Okay. So if we go back to that date that we were talking about on what was it? It was 12/31/2024. All right, so you see here, we pushed to 590. We did not get above it. This is 12/31/2024. This isn't like a coincidence. That's a huge delta level. I can expect us to push up into it, and then we get some sort of reversal. And then we just went all the way down to 584. Does that make sense for you guys, or do you guys have any more questions? I mean, I feel like what I said is all pretty simple. I just use PD arrays inside of significant levels, order blocks, identify what an order block is, watch a YouTube video on it, and then is a specific signature in price that indicates a change in state of delivery. And then a fair value gap is just an area of imbalance on a chart that you just use as 3 candlesticks to identify. And we have indicators that you can use, so that way if you have trouble spotting those out, we can go over those indicators. But like I said, I like to use super order blocks. And the reason why I like to use it is because we have an option here where we can mitigate. So if that fair value gap is mitigated already, and I like to think that fair value gaps and order blocks are one-time use, and I want to make sure that they respect 50% of it. But once it's been mitigated, it turns purple. Like, I mean, and then so I look for, these things. So I see an aggressive candle close below. I would mark this out as a change in standard deviation, 5888. Once we push in that 590 level, or right here actually. And that would be my entry point. And one of the things I like to look at is we have morning stars and shooting stars. So shooting stars are a bearish reversal, and is it evening stars, or I can't remember, but when you see candles like this, kind of like a doji candle, you'll see them below and above. It's usually the first recipe or first ingredient you find in your recipe for a reversal. And then you'll just look at it, you'll just think, okay, we might reverse here, but don't make a trade just off of that one candle. I'll wait, and I'll see that we respected that 590 level already. And that's just how I combine everything together. Is there anything else, guys?
No, I think that like when you're looking at that spy chart too, is that if you're looking back to the high, like the actual candle close high right below 590.50, even though the wicks pop back up, you don't have any candle closing above that, that original high. And so, ICT has always talked about too that the wicks do the damage, but the candle bodies tell the story.
Mm-hmm.
Right. And so that's what we're looking at too, is like if we were to have a candle break up, Go back to that 930 or 928 candle, I think it is. Or those are 5-minute candles. So further back, it's still in that shaded box. Yeah, right there. Any of those, like those are even further back at 7, like right after 7, you got the highest closed candle right there, right?
Yeah.
And every one of these candle bodies on the bounces up, they do not close above that candle body, right? And so as we come down, even though those wicks pop back up to 590.50, none of the candle bodies are closing above the previous swing high, right? Even the internal swings. So that's telling you like price does not want to go higher, even though the wicks keep pushing up and hitting that liquidity, right? The price doesn't want to go higher and actually change the state of delivery to give us like a bullish change of character.
Yeah.
So then we're just looking for, again, your entry point, and, using other things. I see you got the DV trends, like you see the fast trend coming below the slow trend, right? So that's also bringing confluence to price is going to be coming down because that fast trend is now coming below the slow trend.
Yeah.
So all of those things, they all build on each other. And then we're just ultimately looking for like that smart money concepts entry. Now, something to also be aware of is like when we get caught in chop like that at the beginning, like if you stretch that out, that first like 15 minutes.
Yeah, you want to go 15-minute chart?
Oh, no. I'm just looking at the 5-minute chart. But I'm just saying stretch it out a little bit so I can see that like first 15 minutes or so. So there's a lot of bearish fair value gaps in there. And this is something that can frustrate many traders, is that I see a bearish fair value gap, even though it's small, form in the first 15 minutes. And then I see another one come right after 10 o'clock, but then it invalidates it, almost immediately. And so that can be really frustrating when you're like trying to use those fair value gaps as targets or as entry points, because when we start to draw back into that fair value gap, which is, oftentimes how a lot of traders will take those fair value gap entries. Yeah, you see, we inverted immediately, like, and then we just drop back down, and so that can be frustrating because if you're using fair value gaps, you'll like take the invalidation as the stop, and so you might enter that trade as we pull into it, and then it busts through it. You take the exit because it inverted, only to have price fall right back down. So.
Yeah.
Just be aware that like sometimes chop can get us in those areas that frustrate us. But if you're running your stops tight according to like, whatever model you're using. So if you're using fair value gaps, you take the stop loss and you look for the next entry, right? And then I see price fall down around 11 o'clock. There's another fair value gap there, and that one ends up getting respected, and then price dumps. If you see that to the left a little bit. To the right a little bit. Where that green arrow and red candles.
Oh, right here?
Yeah, next to it. There you go.
Yeah.
Yep. There's a bearish fair value gap. Price draws back into it, right? You can take your entry inside that fair value gap. It doesn't get back to consequent encroachment, but so it's up to you how you take those fair value gap entries. But either way, it respects it, right? And then price gives you a nice big dump. So maybe you got stopped out earlier. But you continue to take the entries based on whatever model you're using or whatever strategy you're using.
Yeah, and I appreciate you going into that and explaining that a little bit better than I could, because one of the things I am looking for is a close beyond that level. So you marked out 590. I always look for a close, like you said, I look for a close. I don't want to look for a close beyond that 50% of the fair value gap. I'll see if we can make an entry inside of a fair value gap or inside of an order block. But you'll see as these levels, we'll just wick into them. And I've seen that whenever using this web app and you see those levels marked out using the net OI, I mean, I don't know what to tell you guys. It's pretty high success rate. So if you're looking for a level that we will push into, we always push into those really significant areas and then see if we make a reversal. That's pretty simple. I don't think it's too crazy. I'll use other tools like the NetStat command and understanding delta and gamma. And then I'll make sure, for example, we might like I said earlier on the 13th of SPY and SPX, that 603 price that I was talking about, that 603.29, but when you go to SPX, we dipped right into 650. I mean, 650 has been a respected level. That's huge. I would think to myself, well, why do we stop there? Okay, I look at the other correlated asset, and that's all it is. So,
Yeah,
there
and
goes.
again, I think with with using the Gamma Edge framework, the commands, the web app, all of it, I think it's just given us an edge that we didn't already have with smart money concepts. I think it just takes it kind of to the next level where it allows us to create a better narrative, right? Because I think sometimes with the smart money concepts is like we would get good entries, we'd get those order blocks or those fair value gaps, but then especially on like 0 day, but even on the weeklies, we would be targeting like some liquidity level that seemed like it was a good level. But like if you had the information from Gamma Edge or any other options service, we just use Gamma Edge. You might have a better narrative that price isn't likely to head all the way to that level that we're targeting, but it's going to stop at a level below what we targeted, right? Still a profitable trade, but we didn't know that a specific delta level was there or a gamma level was there, or we didn't know where the gamma curve was, or we didn't know where the net OI was, or any of those things, or where the charm levels were, right? So I think that just having that information gives us a little bit of an edge to have those levels on our charts as well and be a little bit more realistic when it comes to taking the trades and what we're targeting and where we're likely to experience support or resistance.
Yeah. As far as that goes, I feel like, like I think it's a 3-step process for me. Or 4-step actually. Just go on the web app, find those liquidity levels, find liquidity taken, look for a PD array, a bearish or bullish PD array, and then make our trade. So if y'all have no other questions, I'll go ahead and I'm gonna go ahead and head out.
Yeah, thank you for hosting today. I think it's been a great informational session. Again, don't get too intimidated with all the numbers, guys. Like, if you have any more questions, reach out to me, reach out to DeltaJeans. Like, I'm happy to privately explain some of these things in DM if you want more information or you're just struggling to understand. It's a lot. I think it's a lot to get lost in with all these numbers and levels and this and that, but it really isn't as complicated as it may seem. It's just setting those levels on your chart and kind of knowing what to look for. But again, we want to really make sure that you guys understand this stuff. And so we'll probably be hosting more sessions just to hammer in the delta, the gamma, and all the Gamma Edge stuff, because in my opinion, if you're trading options, specifically stocks, crypto, whatever, not the same, but if you're trading options, the Greeks are here for a reason, right? And so I think it's really important that we understand all of these aspects of options trading. So there will be more of these sessions. So again, if you're lost, don't worry about it. We'll try to make sure that you guys continue to get a good understanding. Again, thanks for hosting, Delta. You guys all have a good Sunday.
No problem, man. See you guys.